If you are running a high quality franchise business, eventually your phone's going to start to ring and you're going to start getting calls from private equity firms looking to invest and help you get to the next level.
Welcome to Entrepreneurship Through Franchising, a show about kicking down your cubicle wall and getting honest insights from experts who help entrepreneurs and aspiring business owners every single day. And today I am really excited to bring to you a special guest, somebody who has years of experience in franchising and private equity, and you're going to learn a lot from what she has to share. Alicia, I am super excited to have you here. You have, I think, one of the best books out there that kind of gives insight to people in the franchise industry. We'll talk more about it a little bit later, but it's Big Money in Franchising. And so you're kind of an expert on this. And so before we dive into, the topics and the subject matter in the book, I would just like for you to talk about your background. How do you get to a place where you're writing a book about franchising and about private equity and franchising?
When I was growing up, I wanted to write fiction. And I've tried my hand at it several times and never got there. And I think it's really interesting that I ended up with a nonfiction, very niche topic book. But it was a labor of love, to be sure. I started in high tech. And when I was in high tech for 20 something years, when my daughter was born, I didn't want to be on airplanes to China anymore and Brazil
Yeah.
and needed to decide I wanted to work for myself. So I went into franchising. I found it, largely by accident. I wanted to buy an existing business that was for sale and found a great franchise system of 11 schools in the Sylvan Learning system, that's tutoring.
Okay.
And it felt like a great fit. It's a longstanding, well-respected brand. And so that was my first entrance into franchising was I bought 11 schools and
Okay.
and had all these people working for me right out of the gate. So I was not starting from scratch. For me, that was a better fit than buying a resale was really what I was focused on. When I
Yeah.
sold, I ended up growing that business and selling it and going into management consulting and was working with emerging brands that were hunting for their first outside capital to get their business to the next level. And that's what forced me to reverse engineer, okay, what do those investors want? What are they looking
Yeah.
for? And what what allows you to go find a great partner and what means you have to wait? And what does a good partner actually look like? What do they do for your business once you get there? And then what happens after that? Because there's potentially a second exit and a third exit.
Mm-hmm.
So reverse engineering all of that is the sort of the core of my consulting business at Emerging
Okay.
Growth Advisors and
Yeah.
is the core of the book.
Yeah.
I took that knowledge and packaged it in a way that I hope is helpful for people as they're thinking
Yeah.
about franchising.
Yeah. Well, the book is just a great kind of reference point, and it's wrote. I mean, there's a good portion of it that is directed at what does it look like for the person that's the franchise owner, the local franchise owner. There's portions of it that are directed at the system, the brand, the franchisor. Most of the people that are listening to this are really at the earliest stages of considering, just buying a franchise, right? Like,
Mhm.
should I buy a franchise? And one of the topics that comes up when I'm having conversations with people, obviously, is that nobody gets into a franchise to sell a franchise, but we all know that we're not going to work for forever. And so kind of just help us understand, lay out that landscape of what does that next thing look like after I've been in my business 5 years? I mean, typical franchise agreements, 10 years. So I've been 5 to 7. I've got it open. It's running well. What does that landscape look like out there as I start to think about what's next, maybe exiting out of the system and moving on and doing something else?
So I think when you're first getting started and you're evaluating different franchise opportunities, whether it's a resale or whether it's starting a brand new franchise, the first thing is you've got to assess, is this a business that I'm a good fit for? Because there's lots of great businesses that potentially what is required to be successful isn't really in your wheelhouse. And even with
Right.
training, isn't going to be for you. So start there.
Yeah.
Don't worry about the exit yet.
Sure. That's right. Yeah.
First, you gotta narrow the list of concepts that make sense. Um,
Yeah.
Once you've found a concept that you think makes sense for you, is the right fit, you like the team, you like the training they provide, the validation from other franchisees is strong, you see the financials and what franchisees are able to accomplish, and you feel reasonably confident you could do the same without having to be a superhero to get it done, that an
Hmm.
average person coming into this business can do well. That's a good time. So once you've sort of centered on all of that, that's a good time to start talking to franchisees specifically about the exits that have
Okay.
happened in that system. So in emerging brands, there haven't really been any exits yet. Or if there have been, sometimes that turnover is because they recruited the wrong franchisee. They weren't really sure what
Yeah.
franchisees they needed in that system. So you're not going to learn a lot there. Um, as the system gets more mature, then people naturally start to retire and
Hmm.
want to move on, and you'll get more data about what's happening in that system and what kinds of what are they getting for value, and who the likely acquirers are. If you're in a system that's mostly mom and pop operators, 1, 2, 3 units, then your likely acquirer is going to be another franchisee. So that
Okay.
has an economic consequence of not pushing values necessarily that high, right? Because it's
Hmm.
a limited pool of either
Right.
existing franchisees or someone who's looking at that system coming in and looking for a resale like what I did.
Right. Right.
So you got to sort of know that going in. But over time, as systems grow and get more mature, they naturally start to consolidate. That's just
Hmm.
what happens because the underlying dynamic there is, well, first, people are retiring and moving on, and secondly, the good operators, you see the bell curve of performance, right? You've got really good
Right.
operator, you've got underperformers, and you've got sort of everybody else in the middle. The the franchisor likes to encourage underperformers to leave through various methods, and
Yeah.
there are better performers in the system who say, "Hey, I can make that location sing. I can take
Right.
that over and do well." So the consolidation sort of naturally starts to happen. As the system gets bigger and there are enough units at play, that's when private equity sometimes comes in at the unit level and
Okay.
starts helping to consolidate that system. It takes a while to get there. You're not
Hmm.
going to see it usually before 100 units,
Okay.
sometimes not under 250 units. You may not see that activity yet. But at some point, private equity will come in and start consolidating that system if it gets to that size,
Okay.
and that starts to push valuations up.
That starts to
That's even
push valuations up once there's a consolidation inside the system. That makes a
once
lot
there's
of sense.
momentum around consolidation, right?
Yeah, yeah, that's really great, and I like how you frame that up because the mom and pop, that's and then that's going to go resell or inside the system, and then those operators that are really doing well will grow, and then that starts to happen.
Mhm.
You kind of hinted on this. You started out with this, and I'd like to just go back as somebody who, we've had some conversations. I think you've looked at dozens and I mean thousands or hundreds of FDDs and financials and all of that. So let's kind of go back to that because ultimately anybody that buys a franchise, one, whether it's a reseller or a startup, they want it to be rewarding for them, both financially and emotionally or whatever. But they also want it to be. They also they want a long term. They want this to be an asset. They don't want to buy a job. So when we're looking at we have two things that we can use typically to kind of understand. We can look at the item 19, and we can then have validation calls. So let's break those apart and let's talk about item 19. If I'm evaluating franchise opportunities and I've gone like, okay, this one, I feel like I could be successful. My skills are uniquely qualified for this one. I feel like I could get super passionate about it. I'd love to tell my neighbors about it. If I met that standard, now I'm looking at the item 19. What am I looking for to help me understand, is this a good fit? Uh, is this got something that I can do something with? What are some of the things that you would look for?
So let's separate the item 19 from franchisee validation because you really
Yeah.
need to validate what you're hearing in with the item 19 and then take the
Yeah.
item 19 and go validate that with franchisees so that you
Right.
can't. Um, so first of all, you want to understand the sector and the customer that
Okay.
this business is designed to serve and how resilient is that demand? And how do you generate demand? How much of the burden of marketing the business falls on you, the franchisee, versus the franchisor? And who's paying? And how good are they at whoever is managing the marketing? How good
Mhm.
are they at generating demand?
Yeah.
Because you can be a great operator, but if the door swings aren't happening,
Right.
you are not going to be very happy. So
Right.
you've really got to drill hard into uh, not just can you run this business and can you run the team and, is
Mhm.
this in your wheelhouse, but, um, do you see this being a long-term sustainable business that's got, some ability to take price at some
Yeah.
point? Can you raise prices as costs go up?
Yep.
Or are you gonna be constantly fighting with competitors and it's a race to the bottom? These are all things you've gotta think through. As
Mhm.
you look at the item 19, um, can average franchisees make money? Are they getting a good return on their investment of their money as well as their time? There's also an
Right.
opportunity cost here.
Yeah.
There's like I see advertisements all the time for so-called passive investment franchises, and that
Yeah.
that term bugs me because
Right.
nothing passive about running a business that
Yeah.
have people in it. And there's certainly, I don't think, unless you're in an index fund or a piece of real estate that truly is on autopilot, you can't run, I don't believe, a franchise business passively. There has to be some element there that you're deeply in the business. If
Yeah.
you're really looking for something passive, take your money and stick it in an index fund. I mean, that's
Yeah,
much less
that's right.
like, come on. So, this is gonna be an active business that you're gonna be running. When you speak to franchisees, find out what it takes for them to break even, what kind of volume of business do they have to do to break even, and how hard is it to maintain that, and then grow it so that they're making money and taking money out. And
Yeah.
can they live the lifestyle they wanna live that way? And how long
Yeah.
did it take 'em to get there?
Yeah,
Uh,
yeah, that's
that's it.
right,
So
right. No, that's I mean, and you're right, you can't separate because you're gonna look at the item 19, and then you're gonna need to validate that against what people are saying. So you listen to the franchisor as they're going through their discovery process with you, but then you need to go directly to the people who are running the business and get their feedback on it. So, 2 questions because, everybody out there's got different item 19s and they've got different validation processes. I'm just going to ask here. Hopefully, neither one of us will get in trouble for asking question or me asking a question. If you feel like you don't want to answer it, you can't. But how do you feel about when a brand doesn't have an item 19?
personally, I would never consider that brand.
Okay, okay.
I I don't
Any specific
understand
reason why?
because I'm investing my time and money, and you can't disclose what's
Yeah,
happening in your franchise base. Yeah. Look, if you're an emerging brand, all you're really disclosing is that first corporate unit. So
that
that's the
corporate location. Yeah,
that's the other gotcha, right? So they might be disclosing numbers that look fabulous, but they're corporate run early on. So you don't know yet whether that really translates to franchisee success.
yeah.
And if you've got to think about sort of what kind of entrepreneur are you? I wrote an article for Entrepreneur Magazine a long time ago that talked about, are you an entrepreneur or are you a systempreneur?
Right.
Because
Okay. Yeah.
depending on your personality, you might love working at an emerging brand and being part of um, creating that brand and work and knowing the founder personally and
Hmm.
helping to hone those systems. And you're comfortable maybe that they don't have their training completely together. Other franchisees are like, nope, I want to come in way later than that. I want the playbook. I want everything buttoned up. I want a professional management team. I want this and this. That's more of a systempreneur. You're
Yeah.
probably better off working at a brand that's been around a little bit longer and has more proof of concept behind it. So that would proof of concept to me is 30 to 50 units and franchisees who've been open a couple of years of operating history.
Yeah. I
If you really are a systempreneur, you need to stay above that waterline.
stay above that waterline. I'll just say kind of on the corporate unit thing, right? Like, of course, if you're listening to this, like I've started a franchise. I am below the 30-50 that Alicia's talking about here. And when we issued our initial FDD, of course, we put our corporate location in it. And one of the things that I was always concerned about or mindful of is that I have 20 years in my market, 20 years built on top of a family name that has another
Mhm.
30 years. And so there is an element of like, you can look at where I'm at 18 years later. And when I'm putting out this FDD that showed my previous 3 years to when we opened. But the truth is, like, I've been here a long time, and I was building on top of something else that somebody else is not going to get. And I remember feeling the responsibility to tell them that, like when they would ask, like, well, there's a number of things that I have that you don't have. And one, and you could probably add some more to this. This would go into when we're looking at the item 7, I believe that's item 7, the initial startup cost. Why I was like, this marketing number is so big
Mhm.
because you're going to have to, in 90 days, or in that first 90 days, you're going to have to basically market yourself as much as you can so that you can jump 10 years just in marketing. Did I market that much when I first started? No, I spent like a couple $1,000 in my first year in marketing, but I was able to do it. And of course I wouldn't recommend anybody doing it the way that I did it. It was miserable. So have that budget. Is there, as far as looking at those startup costs, is there anything that you would be mindful of when you're looking at those startup costs from your experience?
So startup costs are often wrong,
Okay.
for lots of reasons. Okay, and so there often is nothing nefarious happening.
Right,
Um,
right.
because the first thing is they're backward looking. So let's say it's
Hmm.
a real estate based concept,
Yeah.
and they put cost to get open in there, and then a supply chain issue happens in the world, and suddenly everything's more expensive. Okay,
Hmm.
well, backward looking, so it's already wrong,
Right.
right? So you've got to put a wiggle room on that estimate to say, okay, how much could it be wrong before it breaks my model of my wanting to invest in this business? So you've got to really understand that and talk to franchisees about what they thought it was going to cost to get into it and what it actually cost them and what those levers were and how many of those levers are active now when you're looking and what could change. Um, but going back though to the emerging brand discussion, I would be much more comfortable investing in a brand where a founder had actually run the business himself or herself like you did, and
Hmm.
you've got some battle scars and you've learned along the way, and you've turned that knowledge into trying to make a system that other people can follow. And you didn't do it in a year, you did it over several years. I'm much more comfortable with that than an emerging brand that opens a corporate location, runs it for 1 year, and then starts franchising. To me, that is a very different game. And just so we're clear, there are literally hundreds of brands that launch every year and start franchising with 0 corporate locations. That would
That's
never be something I would recommend.
that is
Let
hard. That's hard to
let
believe because I can't imagine how you would even know what to tell people if
I
you
don't I don't
didn't
know.
have a depth of experience. My goodness, 1 year into my business, I didn't know anything.
I'm not spending my money paying someone else's tuition, let's put it that way.
Yeah,
So
there you go. There you go.
I would much rather learn from a founder who's been in the trenches and knows how to run the business and can explain in detail why the systems and support that are in place, why they make you successful, and how they learned that from actually running the business themselves. That makes a ton more sense to
Yeah.
me.
Yeah, no, I appreciate that and feel feel the same way just from a kind of an ethical standpoint. I couldn't do it. So switching gears here, and I appreciate you just your transparency and your honesty about your perception of the item 19. Let's talk about that validation process, because these two things I think are some of the most critical parts of the whole process, right? Is understanding the numbers and then talking to other owners about those numbers, about what their real world experiences are. I know that some brands have a relatively loose validation process. They might make some introductions, but they kind of essentially say, call everybody, talk to whoever you want to. Some brands are bigger, and so they have group calls. But I do, you hear the stories of some brands who they have the group calls, which I don't know if there's anything necessarily wrong with the group calls, but they look negatively upon a candidate who steps outside of the group call, or they are instructed not to call outside of the group call. Talk about like what you believe the validation process should be, and how you would feel as a person going through and being told not to step out of their validation process.
First thing I would say is that you shouldn't have any anxiety about asking franchisees really pointed questions.
Mm-hmm.
Um, if listeners are interested, I have a write-up that I provide people on. Here are all the list of questions you probably should be asking at some point in your due diligence journey. You can't ask all of them to every franchisee you speak to. It's too much, but you're going to start to hear common themes as you're talking to them, and you're going to want to drill into things deeper when you start to hear those common themes. But in my experience, franchisees are often very candid and are willing to share that information. And some may be even willing to share their P&Ls with you, as long as
Yeah.
you're respectful of their time, honor their
Yeah.
time, book an appointment, all the normal, business courtesy that you would
Right.
have. As you're going through due diligence, you have to check your psychology a little bit. Make sure you've got a wingman to keep you in check a little bit, because your enthusiasm can sometimes run away with you, and you start to envision yourself in the business already, and you're sort of not asking the hard questions that you need to, or it's easy to be dismissive of things that don't fit what you're looking for, and you've really got to pay attention to that stuff.
Yeah.
Um, in terms of loose versus tight validation, group calls, that sort of thing. Again, this is just my bias, but if some franchisor told me I was not allowed to talk to a franchisee,
Yeah.
it would not be in that brand. That is ridiculous. I'm sorry. I don't understand that. Um, Group calls, I think, are great because there are common themes and you can learn from other
Mm-hmm.
people's questions. So
Yeah.
I do think group calls are very effective validation, but no franchisee on a group call is probably going to say a ton of negative things, or they wouldn't be
Right.
invited to a group call. So it's sort of
Right.
like, that's kind of obvious.
Yeah.
They wouldn't get invited to that party again. So you
Yeah.
do have to talk to more franchisees. Ask about, when someone's underperforming, why are they underperforming? And see if you can actually talk to those franchisees. When people leave the system, what are common reasons? Try to get in touch with those franchisees. Now, they may have
Mm-hmm.
not NDAs that make it hard for them to be candid.
Mm-hmm.
So you really got to be a little bit of a reporter here and listen to what they're saying, that their pain points were, and decide, like, is this an operational problem? Is this a brand or
Yeah.
demand problem? Or did they really make a recruiting mistake here? That
Mm-hmm.
happens.
Yeah.
Or something could have happened in that franchisee's life, a move or a personal circumstance that just made the business no longer a fit. It happens.
Right.
But you've got to, keep asking and talking to as many franchisees as you can get in touch with as
Yeah.
possible, and understand how they are really doing and how they got there, and more about their background, what it takes to be successful in this brand, and what their exit plan is.
Yeah. No, I mean, and the psychology component I think is so important. I've instructed candidates, like, I want you to find out some stuff that makes you uncomfortable. Honestly, like, I want you to be uncomfortable. I want you to be scared. I want that, because if you make, I've seen people go into business that shouldn't have gone into business because everything was sunny, and because they didn't want to ask a hard question because they didn't want to hear a hard answer. And you want to hear that. You want to hear, if it's a home service business, the thing that like just drives me nuts is this perception that there's not seasonality in home service. I mean, that's my industry, and there's always this like, people are dancing around seasonality. I'm like, like, hey, I need you to hear right now that home service is seasonal, and I don't care what you do. I don't care what part of home service you're in. It's seasonal because people don't spend money around Christmas. They get all their repairs done or whatever they got to get done to their house by roughly by Thanksgiving, and then kind of gets quiet because people don't want you in their house while they got their Christmas tree up. And then in January and February, people don't spend money on home service. They just don't. I've been doing this thing for a long time, and nobody spends money. And the weather might suck in your area, and it just drives me nuts that people are like, I was talking to a guy the other day. I won't say the brand, but the brand would not tell him that it would slow down in January and February. And I'm like, that is wild. It is going to slow down in January and February. This business does outside work. There's no way in your area it's not going to slow down. It's going to slow down. And so you need to hear like that business is going to be slow in some seasons. If someone tells you like you need to hear the bad news, and it doesn't mean that bad news is a bad business. You just need to be prepared for what the downsides of the business ownership in that system are going to be.
Yeah, and other related things to that. So if there's
Yeah.
a seasonality component, okay, what do you do with your labor force when you're slower?
Right. Yeah.
How do you keep them busy?
Yep.
How do you handle marketing during those periods to keep your team
Right.
busy? I actually did a lot of home services work in Q1 because I was selling a house,
Uh-huh.
and I got great deals across the board.
Sure.
They weren't as busy. So
Yeah.
I was contacting them before the holidays telling them, "Hey, this is coming." And they seemed kind of skeptical, like, "Yeah, lady,
Yeah,
fine."
right.
But then I got back to them and said, "Okay, I'm ready to go. What can you do for me?" And I got
Yeah.
some great service and great deals on that and have recommended them all,
Yeah.
stars and so on. So you just gotta understand, like, what that means for the business. And there's some businesses that, um, are seasonal, and that's a great time to reset as a
That's
franchisee.
right. That's
And
right.
take a break. It's not
Yep.
easy being a business owner. That might
Uh-huh.
be part of the lifestyle that you're going for is to take, Thanksgiving to, I don't know, Valentine's Day essentially
That's
off.
right. That's right. That's I learned to ride that wave, and my family appreciates it for
No.
sure.
But I grew up
Uh
in California, and it's bright sunny day in Los Angeles in the December. I
yeah.
don't know. It depends on, I don't know, it depends on your part of the country
Yeah.
too.
Uh So as we get closer to the end here, the list of questions. Hopefully, you can provide a link, and we can drop that here in the description, because I think that would be a huge value to people. But as we get closer to the end here, I know that in calls that I have often, the question comes up where a potential franchise will ask me, what is your vision of the future? And I know in that question is the Ty, how long are you going to be here? That's part of it. So let's start with that from an emerging brand standpoint, because to your point, there's a ton of emerging brands. They're all over LinkedIn and the internet. Many of them are growing fast, and it's super exciting. You're asking that question. Tell me about that question. What would you want to hear as somebody with your experience when you ask that question?
I think that I don't need the answer to that question because no matter what you say, um, it's probably not the truth. So let me unpack that. If you are running a high quality franchise business where franchisees are successful and making money and you are growing, eventually your phone's going to start to ring and you're going to start getting calls from private equity firms looking to invest and help you get to the next level. That's
Right.
just what happens. Now, whether that founder wants to do that or wants to pass the business down to a family member or whatever, that's a different story. So if I asked you that question or a founder and they said, "Oh, I get calls from PE all the time." Okay, that may or may not even be true,
Hmm.
frankly. And so that does not help me make a good decision about whether to invest in that business. And the other thing is there's a lot of tire kickers out there. So yeah, they might be getting
Yeah.
phone calls, but if they haven't transacted yet, then that it just means probably they're not ready to transact
Right.
or somehow
Right.
they're not attractive yet.
Hmm.
Um, but it just inevitable in private equity's been now in franchising since the 90s, and, all these decades later is here to stay, and they will
Yeah.
continue to invest, and they will continue to accelerate brands and help them get bigger and more
Hmm.
mature in many good ways that benefit franchisees. So I wouldn't see it necessarily as a scary thing. I would see it as a sort of a natural thing. You grow up and,
Yeah.
you know, you attract capital. That's kind of
Yeah.
what happens.
Well, I think that was going to be my follow-up question is, okay, so, you're saying it's not the end of the world. It's not scary if my franchisor takes on additional capital, private equity. So what could that look like for me if I'm on the other end of this thing and I'm running those questions through my head and, like you said, the franchisor is going to give you an answer, but take it with a grain of salt. What
Yeah.
does what does that thing look like when that happens? And have you ever been on the other side of that? What does that look like?
I have. So I'm also, as well as being a franchisee, I'm also an investor in franchise businesses. So I partnered with private equity to help accelerate brands.
Hmm.
There's a chapter in the book that talks specifically about the the steps on the ladder as you work through. So normally what happens is the brand is growing and it's founder run, and at some point, if a private equity firm comes in, that first firm is usually really good at accelerating emerging brands. That's their
Hmm.
specialty. So they will add people, they will add infrastructure, they will work on the tech stack, they will increase marketing, and they will continue to sell franchises. And they will start to grow that business. The founder's usually still in the business. So most of those changes feel pretty good to franchisees. It may feel a little bit more corporate than it was before, but
Hmm.
mostly they have purchased the business because the founder's staying. They don't
Okay.
usually like to purchase a business where the founder's leaving.
Okay.
Um,
Got you.
so but then the next exit is where things really start to get much more corporate, because now you're
Hmm.
trading to a PE firm that is optimizing and accelerating growth, and the founder usually exits at that point. So that's when it can feel very different. And for some franchisees, it no longer feels the same enough that that's the time they want to leave. For others, it's like, yeah, some of the stuff where the founder was holding us back or
Hmm.
had an opinion about something and we couldn't come to an agreement. Now the new owner's like, yeah, we're going to do things differently. I like this new owner. I'm going to stick with this thing and continue to watch this grow, and my business will grow.
I can see
So
where you were talking about earlier that systempreneur,
yeah.
where in that second phase where that systempreneur really, and I think this is why people there's things like Neighborly out there, and they've got just these phenomenal systems, and if being a systempreneur is, I think, where you feel like your skills, like I'm sure that like just all of those systems are going to be there for you that an emerging brand, a smaller brand, is just not going to have.
Well, you need to validate that, but in theory, that is true.
Sure,
Especially if you're
sure,
joining a
right,
multi-brand platform,
yeah,
there are synergies potentially
yeah,
across the brands, but again, you gotta validate. By the time
yeah,
it trades the 3rd time or 4th time, now it really is a very different business at that point. And the franchisees who came in while it was emerging, may or may not still be in the system at that point. Look, there's plenty of McDonald's and Wendy's and Burger King franchisees who've passed their businesses down through
hmm,
generations, have seen all these changes happen. What's different now is that private equity has accelerated this process dramatically in franchising. So the change is always hard, but the speed of change can be drawn.
right,
And so just know that
okay,
it can happen. And, there are many benefits for potentially franchisees and systems that have been PE backed, and some things they may not like. And just like in any business you own, you've got to keep your business in a sale ready condition so that if the winds change and you don't really like where this is going, you can exit
yeah.
and get maximum value for your business. I mean, it happens.
Well, you've teed up my last question. And again, I really appreciate you making time today. But you said keep
Sure.
your business in a sale ready position. And for those listening that aren't starting yet, but there is is it Stephen Covey, right? Begin with the end in mind. What does that mean from your perspective to keep our business in a sale ready position?
Clean documentation, clean books, strong team. You've got to have a lieutenant who can take over for you, right? Or
Yeah.
or someone who can work for whoever's taking over for you, depending on how that,
Right.
whether they're buying an operating unit or a
Yeah.
group of operating units. Um, Run the business as if it's for sale right now. That means, really keep focused on marketing, keep driving demand. Don't take your eyes off the business, even if you get yourself under a letter of intent that someone's made you an offer. That's when people can start, the wheels can come off, because now their minds
Yeah.
are already right? And they forget to run the
Right.
business. And then the metrics fall, and then the buyer goes, "Oh, I'm not paying that anymore because I thought it was going this way." And now you're like, at this trajectory.
Yeah.
So you've got to stay focused on running a good business that's attractive to a buyer. It's
Yeah.
it's an obvious thing, but you'd be amazed how many people lose their way once they, because look, a due diligence process takes a while and it's
Hmm.
distracting. So the
Yeah.
more of your sort of documentation and financials and your story you have ready to go up front, the less
Hmm.
work you're going to have to do, because you're still running the business, but now you're also answering a bunch of questions from the buyer.
Yeah. Alicia, this has been really awesome. You have just a wealth of knowledge in this space. If you want to, if a person wants to read more, where's the best place for them to grab your book, and what's the best way for them to get connected with you if they have more questions or learn more about how you can help their business?
Sure. The book is on Amazon, so Big Money in
Nice and easy.
Franchising, easy to
Yeah.
find. Um, and I think I'm on sale at the moment, so always that. If you wanna reach me, LinkedIn's probably the easiest way, to
Yeah.
find me, because you can type in either Big Money in Franchising or Alicia Miller, and you can track me down. Or if you prefer, A. Miller at emergentgrowthadvisors.com.
All right. Alicia, thank you so much for being here today and educating us. And everybody, go grab her book, and so that you can begin with the end in mind and have your business ready to sell at all times. Alicia, thank you so much.
You're welcome.
So I just want to thank you so much for listening to Entrepreneurship Through Franchising. If you found value through this show, I want you to do me a favor, and I want you to hit the subscribe or the follow button so you can get every single new episode that we put out. And if you'd like to connect with me, I just want to encourage you to find me on LinkedIn. All you got to do is go to LinkedIn and search Ty McBride, and you'll find me there. Thanks for watching. Later.